earnings in full focus, and Canara Bank is the next stock and the next company on the radar. Now, yesterday there was disappointment coming through. And why do I say that? Because the net interest income was down 5.3%. And deposits don't seem to be growing that, steadily or that robust a fashion for the bank as loan growth. So we'll talk about this with the management. We have, of course, Mr. K Satyanarayana Raju, Managing Director and CEO of Canara Bank with us. Mr. Raju, thank you so much for joining in. So I'll come to this NII situation in just a second. But first, let's talk about the big headline of the morning. It's a good headline, right, from the Reserve Bank of India. This liquidity boost that's coming in, to what extent will it help you in terms of margins, in terms of, just the business overall? If you could give us some sense.
Yes, madam. Actually, our credit growth, if you look at that we have given, when we have commenced our financial year this year, we have given 13 parameters for guidance to the investors. Out of these 13 parameters, already 9 parameters we surpassed by the end of the December quarter itself. The major thing is the advances growth. What we have predicted, we have given the guidance is at 10%, but we could achieve around almost 10.45 to 10.5%. This has helped us in increasing the interest on loans and advances. But you might have seen that the NII is negative. But the NII negative is only because of last quarter, the one-time benefit of 320 crores from one NPA account. It has we could recover that 320 crores from that NPA account. That is a one-time benefit. But at the same time, the second one is the liquidity operations in the market. The overnight investment or any that's short-term investments when you have a surplus liquidity in the system. But this time we have not used that window, but we have used the advances window so that we get a higher returns. That's why the loans in the interest portion on the loans and advances has considerably increased. But the only thing, the other interest income has shown a decline. Except that nothing is there, and we are on very strong footing. And here afterwards, that NII will continuously grow in the quarter-on-quarter basis. Regarding the liquidity.
So, sir, just if I've understood you correctly, what you're saying is that in the base quarter, you had that one-time boost, a bump up because of the recovery from or the sale of an NPA account, which is why you had that additional 320 crores. You didn't have that in the current quarter, right? And then obviously the liquidity operations and what you were doing, that didn't quite add up, if I understood you correctly. So if you could just tell us, now there is anyway liquidity support that's coming from the Reserve Bank of India. What can we expect on NII and the margin as well in Q4?
See, especially because yesterday we have seen the announcements by the regulator that they are injecting some liquidity in the system. If the liquidity improves, the major concern is interest on deposits, madam. Garnering the deposit is not a concern for us at any cost. But the garnering at what cost? That is the major concern. We are cost consciousness. That's why we are growing at 8.5 to 9% what we are given the guidance. Otherwise, if that liquidity improves in that, definitely we expect that some softness may happen in the market. Once that deposit rates started coming down, then it will have a positive impact on our NII. Unless otherwise the liquidity in the market is improved. Otherwise the NII will continue at 2.8, the present level, whatever it is there.
Deposits, I mean, a lot of the other banks, both PSU and private sector, many of them have managed a deposit growth in double digits. Some have even gone to about 15% on the private sector bank side. So wouldn't you say that, your deposit growth is a little, lower than the industry average? Is this just a one-quarter phenomena? And how do you see deposit growth shaping up in the coming quarter?
Actually, we have a 8% excess SLR, madam. So, and keeping that excess SLR idle may not be a good idea for our business proposition. That's why we are using that window available with the regulator, and we are raising the funds from the at a repo rate that is coming at 6.5. And when you are getting at 6.5, raising the deposit at 7.7, 7.8 may impact our bottom line. That's why we are using this, because we have that liquidity comfort in that. The second one, what I want to tell you is, the retail term deposits, we are more interested on that instead of going for a bulk and high rate of interest things. We are continuing to garner that retail term deposits. Even the December month, we have initiated 2 blocks, that is 2 to 3 years and 3 to 4 years period, the 3 to 5 years period, 2 lakhs, we increased the rate of interest. Because of our increase in the rate of interest, we could garner 8,000 crores. And our CD ratio was still below our expectation of 78%, because the SLR is 18% and CRR is 4%. That requires 22%. We want to keep internally that our CD ratio at around 78%. When you have that cushion, so that's the reason we are going little slow on the term deposits. Otherwise, garnering the deposit is not an issue, but garnering under the savings bank and CASA is definitely a concern that we are trying to address with various products and services.
Okay, all right. Hi, sir. Good morning and good to see you. And thanks for the clarity on the NII parameter as well. But give us two basic numbers. What is the credit growth target that you have? You know, there has been, we're looking at the data and there has been a slowdown for the industry at large. So for your bank, for this year, what should the credit growth look like for the next year as well? And what is the NIMs, the broad range we should work with?
So the growth rate, definitely we are given a guidance of 10% that we can surpass it, that growth rate. That may not be a big issue for us. It is because intentional calls only what we are taking it. Advances growth, earlier when we are given that 10% growth, that itself time I have shared with you that we may grow at around 11%, and we are expecting this quarter we may touch that 11%. So overall these things, most of our guidance, whatever we are given, we are going to surpass that guidance. The NIM, there's definitely a concern. That's we are expecting that the present level cumulative NIM, whatever it is there, that's a 2.8 to 2.83. That may be the reason, because let me see that next 2 months, if because of the regulatory actions, if the liquidity increases, if the pressure on the term deposits with rate of interest decreases, we may improve 1 or 2 basis points better in the NIM. Regarding the next year, our credit growth definitely we. Tell me, madam.
No, sir, please continue.
No, regarding the next year business growth, we sure that we can continue. See, initial year when we have projected 10% credit growth, the market has taken it as if we are conservative. But now the industry has itself has proven that what we are given is a correct guidance, but we are surpassing what guidance we are given it, not like other banks. So next year also there is a strategy meet is there in the March month. We will decide, we will discuss there, and I'll come back and share it with you that what the guidance next year is there.
So like you said, I mean, between 10 to 11% perhaps growth in the loan book. What about growth in deposits, sir? FY25, end of FY25 versus end of FY24, year on year, how much would you have grown your deposits by?
Definitely, and I feel that we will cross that 9% guidance, whatever we are given. We will surpass that guidance, madam.
Okay, and NIMs, like you said, would be around 2.8%, 1 or 2 basis points, depending on the liquidity announcements. Sir, just to wrap this up, to go back to today's RBI announcement, this, OMOs that they've announced and the VRRs that they've announced, immediately, do you see any benefit, any relief for you?
Definitely there will be a benefit, madam. When the market is 60,000 crores, if they are injecting the market, the pressure on the bulk deposits will come down. But we have seen recently, because that demand for the bulk deposits has increased in the market and it has crossed 8%. At least that will be softened immediately. That will help the banks to focus on lowering the interest on deposits, madam.
Okay, very quickly, if you could help us out with what are your expectations of resolution on the NCLT cases, sir?
See, last quarter we got around 653 crores through various resolutions through NCLT, whether it is a resolution directly or the liquidation or whatever it may be. And we are expecting in even the current quarter also through NCLT around 600 to 700 crores we are expecting to recover on that. We already identified in advanced stages are there 2-3 accounts. We expect that this quarter also will be there. In regarding asset-based side and all, whatever we are strong, what the performance we are showing last 2 quarters continuously will continue in the third quarter also. Our recoveries will be much higher than our slippages.
Okay, all right. Mr. Raju, we'll leave it there, sir. Thank you very much for joining us, and it's a pleasure having you here on CNBC-TV18, taking